Guys, or good day per se, and welcome to my video that I promised to drop as I noted on my channel. So without any further delay, I wouldn't want this video to be too long. I'll just dive right into it. So is this video is mainly about trading gaps. So for a while now, like I think from towards last year, towards ending last year or so, we started to notice gaps that started to appear on the charts, even though they appear on other pairs too, but they were not so frequent on gold. So they started to appear on the charts, and these gaps, when they appear, mostly at most, you could backtest and check to confirm what I'm saying. You'd notice that they usually appear first, like the new week of a month. That's period, that Asian session, that's Asian session from Sunday evening down to Monday. They usually appear there, and some other times you could see on other days. And usually, you know what gaps, why gaps usually occur is probably due to major fundamental occurrence that happened through over the weekend or from the previous week that makes price to like gap out of where price had closed the other time. So it could also be due to technical reasons and all of that too. So without any further delay, I'll show you how we do this. So I'll use this as the template. So what you notice is that, let's say this candle now is the last candle on Friday. What's when the gap forms, you'll notice probably from Sunday, when the Sunday evening, when the market opens by 11 West African time. What happens is that you notice that there will be a gap. Let me take this out. You notice a gap on the chart whereby there is no candle. The space will look like this, and you notice the candle will go and form above right here. You get now. So once this happens now, we could just mark this space. That's from the week of the new candle that formed, gapping without overlapping the previous candle. um we'll just mark it as something like this. You mark it like this. So this is your gap. So what happens, or how you can take advantage of these gaps, is that, and how you could also use them for like extra confluence when you are trading, is that most times when a gap that will signify probably bullish movement, the way it occurs is that you notice that price like opens gaps to the upside. You understand? It gaps to the upside. That's like to signify probably a bullish gap. Sometimes, most times these things are not always they're not always the same, but then with like the gap into the upside, now it gives you like an edge to know that, okay, it's like price is having more intentions to like go to the upside. Probably it fills my gap like this, like just like this, it fills the gap, and then maybe most likely we'll get a PY somewhere around here. It takes this PY and goes during probably from the Asian session, and then down to London. You notice that price will still come back to similar levels right here and still use it as a way to push higher. But that's not what we'll be discussing in this video. So the second example is when it's gapping to the downside, probably signifying that price wants to go lower. So what we'll see is that we'll see price filling up this gap. Most times, probably the POI is, maybe, let's say it might be here, but price might just fill the gap. And then once it fills the gap, you notice that price continues back to the downside, and maybe down London, we might see price taking out this high, which would be the Asian high, and picking up this PY here, or still coming down to this same region here before we continue to that direction. So the main focus of this video is how to take advantage when you see these gaps occurring, because they present themselves with opportunities that we could seize advantage of them. So let's say, for instance, now this gap happens and you notice it on the chart. What I do, or how I take advantage of these gaps, because I've had so far, let's say I've taken more than 10 trades, 10 gapping trades. I don't know if it's up to, but let's just say out of 100% of all these trades that I've taken due to these gaps, it's only one that has failed so far. And the one that failed, you would see it like we'll review it, because it just happened this week that passed by, and it was due to like a tight SL that I used. So what you do is that after this gap has occurred, you go down to lower time frame, and you mark the whole region that this gap has happened. What you notice is that after the gap happens, let's say this candle now that has been formed, most likely what you see is that you notice price will take out the week of this high, and probably hang somewhere here, what you would notice is that next thing you notice that price will leave some type of confirmation, either bullish or bearish. In this particular case, it will be bearish. So one of the confirmations I use, or probably one of the confirmation most people that trade uses, when you see that break of structure. So what you notice is that after it takes out this high, you notice that it might do this, take out this high. What you notice is that you notice a break of structure now. Once price breaks structure now, you notice that price will come back for either the discount level, or we use this level right here. Price will come back for the discount level, or use this level, or probably an FVG or something. Though I'm sorry for this noise disturbance, lots of Jenna on right here, so it's causing a lot of interruption, but I'm sorry. I just hope everyone gets me clear though. So what happens is that price will come back for either an FVG or an OB, but most likely how I trade it is that I pick the FVG here, or I pick this level. What you notice is that after price picks this level, price will use it as a way to come back and come and fill down to this week. Don't worry, we'll come to examples so you get it more clearly. So you notice, just as I've said, you notice that we take out this week. After we take out this week, you'll notice a bearish or bullish confirmation, which could look anyway, because everybody has different ways of confirmation. So you notice it's the break of structure, and then price might use the discount level. Sorry, this will be the premium level. It might use the premium level or not, and use it as a way, or depending on your confirmation, either an IFVG or an FVG might be popping up or sitting down here perfectly. What you notice is that price now, after you see this, it's a lower time frame type of stuff. So after you see this, you just take it, mark your level, your stop loss above the significant high on lower time frame, and your TP at this level. Most times it will give you a 3-hour trade, 5-hour, or probably a 2.9-hour or 2.5-hour type of trade. That's how most times you see this thing happening. We'll jump into examples soon so that you get to understand it better. And the same also goes for when we have this in a bullish scenario whereby we're taking the buy trade. So you see it happen probably like this too. Take out this low, probably you see something like this, bam, price come back. This is like my a type of bullish confirmation, and we take out these levels, and probably we get our POI that we use somewhere right here. Could go as low as this, depending though, it depends. Could go as this, and then take our trades from this level, cover this significant level, and chase as high as this level. That's how simple it is. So I'll jump into examples now. There's one that happened on Wednesday, so I'll jump into it right now. I should stick to like 15 minutes here. Okay, no, let's come back to this chart. And again, one thing is that it doesn't always, some brokers, you won't see it on like the chart. Like you see this particular chart, this FX, that's gold on forex.com, it doesn't show there. But like on my Exness or other brokers too, it shows. But like on Oando here now, you can see it here. So I'll just delete this so that we can see it better. So I shift to like 15 minutes. So notice what happened here. Let me take this out. Sorry. Let me take this out too. So notice what happened here. Notice this candle was Wednesday. Okay, towards the new day, Thursday. That was when this gap happened. So I told you that most times it happens like that's like getting to the first day of a new week to a new month. But it could also happen at any day too, and we could see it how it happened here on this day. And notice something, it will happen most times. How this thing happen is that price will gap like at how will I say this? It will gap when market close and opens. I know usually price closes from 10 p.m. West African time, and then opens 11. It opens at 11 p.m. again. You understand? So now price closed somewhere here. You could see it around. Let's switch down to 1 minute. Switch down to 1 minute. On 1 minute, here, if we should come here and zoom in, notice what happened. If you notice what happened here, you notice that price closed when? Price closed 9:59. That's like 10, and opened when? 11, at 11. So just like I told you in the example back there, what you do is that now you cover from the week. That's the new candle that opened above that side, from that week down to that one from market closing, and mark it. And notice what happened after this happened. Now you notice what did I say initially. Price will take out this level, and remember what I said though, you have to wait for the bullish in this case it's going to be a bearish confirmation, so you have to wait for that confirmation first before you do anything. And notice what happened. This is 5 minutes and we did not get any form of bearish confirmation. We kept on pushing higher, taking out highs. If I should come back to 3 minutes, what do you see? Price kept on pushing higher and higher. If I should come back to 1 minute, what can you see? You still see price pushing higher and higher. I don't know if you are with me. You can see price pushing higher and higher, gapped up, give us this bullish low up, broke structure again here on lower time frame, picked others here, pushed up again. And notice where it's all changed. Somewhere here, picked here, did not break this low, and next thing we have more bullish impact. But then you know how after a break of structure, the OB left here, price came back, but instead of respecting it, price broke this low here, whereby we had the break of structure here. And that is the first way to start to see that okay, now I'm getting bearish confirmation. If you come to 5 minutes, it's not very clear here, but I don't know, most people that have watched my previous video from my channel, you notice that I talk about these indecision candles and how when price sweep first of all sweeps the high or low, but when it sweeps the high first, like it gives us the kind of, when it sweeps the high and then comes down and breaks below the low, it gives us this confirmation that okay, price is starting to get that weakness to the downside. So you could see it here, it sweeps down that side. And like from my own strategy now, from this 5 minutes now, I could start to, from this low, after it swept it, came back here, broke below the indecision candle low. I could, from 5 minutes now, I could take this trade from 5 minutes, but it's not clear. But with my own strategy now, I could take it from here and put my entry right there and mark my high to be somewhere here. I'll put it right there, and you could see down to the to fill the gap here. Notice how it happens swiftly. Sweet flexible 3-hour chain at 100 pips, and a more better type of, or let's say a more better confirmation that most people are more aware with. Like how I said, you have to go to a lower time frame than this. If you should clear this is 5 minutes back. Let's say already I have this confidence and I'm seeing that okay, possibly, because probably I won't just take it like this, I have to go down lower. I'm just giving an instance now with this indecision candle. Now let's say I go down to 3 minutes after I see this indecision candle, or I'm already stuck on 3 minutes or 1 minute. When you come down here, what do you see? You notice that you can see your break of structure now. If I should take out this entry now here, this particular line that I marked here from the 5 minutes, I should put my break of structure here. I could see price breaking structure already. If I should take my fib retracement tool now and mark from the top of this week now down to where price closed below this low, like the full body of the candle kept on closing below this week here, somewhere right here. Let's say we'll go as down as this, depending on how you mark it though. Go as down as this, somewhere here to the week. You notice that price tapped the 0.5 level, that's tapping the premium level. But then let's take this out. One of the entries I used already and it's in my channel already. I've discussed about this in my channel over and over. Is picking the trade from this level here, and you could see how it played out. Sorry, okay, like just like this. This is one of my confirmation entries I use a lot, and putting my stop loss to the significant high here. And guess what? Before it gets to this tip already, I'm making one ad or getting enough to like break even or take partials, and coming down to the TP level here, you can see we're still cooking another sharp 3-hour trade. If I should still come back to 1 minute now, you could even see more better confirmation on 1 minute. Coming back to 1 minute now, what can we see here? You could notice this FVG that was left here after this thing happened. Are you seeing? You are seeing, right? And it's falling in place with the 3 minutes confirmation entry. Now, for some people trade FVGs by taking their entries to the midpoint of the FVG. Can you see? And this place, you know already there's a breakout block here too. From, I told you, the break of structure, price broke and left. So there's like so much confluence to the whole stuff. And you could see it here. You could see how many hours it still gave. It played out like a 3-hour trade here. That's how simple this stuff is. But I know that probably many people won't still believe, but till we give more example. So let me find another one. That was the one that happened at the beginning of this week, which I think that one was a bullish one that it got me stopped out. I got stopped out that day with the VIP team that I took the call. Okay, I marked it here too. What can we see here again? Remember what I said though. Just like how we give from the example. Notice here, this candle was on Friday, right? Where did the market open? On Sunday at 11. What did I say? Mark the gap from this level down here now. Now notice something that happened here. After this thing happened here, now from 5 minutes, you could see that price started to like chip into it to fill, but then no sign of bullish confirmation, because notice what happened. Fall down, rejected, and came back up. Notice how this candle closed. Remember, most times we use the candle close as a way for your entry, like the way you determine your entry, not the wicks, or like all those wicks also signify rejections and how price is bouncing back from certain levels. So notice what happened here. You could see how we were tapping into it, and next thing, this bullish candle came down. Price came down to this level. And sorry, there's one thing I said from that example side. I said you notice it to take out this low. You notice how it took it out, and when it took it out, no bullish confirmation yet. Price still went down low as this. But notice what happened now. After price went down low as this, we noticed that price came and broke this level here. Already this candle that rejected like this back to this level, and price closing above it, it's already giving us that intuition, or giving us that signs that okay, price wants to move to the upside now. But then we need more confirmation now. Come back to like 15 minutes, higher time frame now. Come back to like 15 minutes. You could see that now coming back to 15 minutes, we'll see that price is still rejecting. It's not too clear. But then notice what happened here. We fell back down to this level, and then next thing, break of structure. After seeing this break of structure now, you could see that it's still matching with the level from that 5 minute, that candle I was talking about. But that'll be another video for another day. I think I've dropped a video too about that entry that I've used multiple times. But to get more confirmation, you need to switch up to like higher time frame. So you could see what happened here now. A break of structure. And after a break of structure, where will you take your trade from? Remember, you need to close the significant low too. After this break of structure now from 15 minutes, I could pick I told you about this entry that I use a lot, and that was what got me stopped out that day. I placed my stop loss here instead of like covering down. If you notice, I usually close my stop loss below. Like, I know that we've spoken multiple times now. If you are familiar with trading, you should know that your stop loss is supposed to go below the significant low. And the significant low after the reconstruction is this guy here. So our stop loss is meant to be somewhere here. But if you notice how I placed my stop loss from the first example that we picked there, you notice that I placed it somewhere around below this other level that the price swept liquidity from. that's somewhere here. Why am I doing this? Because there's this entry which will also cover. We will also cover it in one of my videos. So we'll cover it, but I think I've dropped a video too about it in my community. So this entry now, if price is going to fail, if this trade is going to fail, there's no how. Like, it's not advisable to put your stop loss here. Put your stop loss somewhere around here, or as low as this. But me, I take it somewhere around here, because I know that if price now wants to play fish now, it will come as low as this to pick entries, because it's another entry. But I don't trade this entry. I will use it time to time. And then from the fact that this week now swept liquidity from this guy, broke structure now, there's that high chance and high tendency that if we pick 50% of this week now, that will be another entry that we'll talk about. 50% of this week now, price will come back for 50% of this week. Most likely, when we have like these weeks around our significant lows and all, most likely price will come back for 50% of that week. Now you see, well, that's another entry now. But then when you take the trade from this level, you just, let's go back to 5 minutes now. When you take the trade from this level, okay, let's just find where this stuff is. When you take the trade from this level, where will your TP be? At the tip here, and you could see 150 pips to R3. But if you refine down lower now to a lower time frame now, with the information now that you've gotten from 15 minutes and the break of structure that you've seen from 15 minutes to, if you should refine and go down to 3 minutes now, I see how price came for 50% now. I see how price came for 50%. We adjust this now to 50%, and even drop it so down to this low. How many R3 are you seeing here? 9 R3. That's like for this other entry, which I rarely use. But if we take 50% of the candle now, are you seeing it's a 7 R3? And I could still use that stop loss that I'm saying, adjusting it to just be some few pips away from this level that price swept liquidity from. Adjusting it like this. And are you seeing how this played out? This played out aggressively, like 10-hour trade. The 10-hour trade, and it played out very, very fast within the Ishan session. I noticed something that I told you about, how these gaps try to like help us to like determine the movement that price might take during the day. Also, notice how after this trade happened, I noticing how price sold perfectly that day. I seen it. Price sold. And notice here, this other example here. After we filled, came back up for little buys like that though. And next thing, you could see how it moves. But then that's like the main takeaway. That's of like taking advantage of this gap openings. So I guess with this explanation, I guess that anybody could have a good and like you have a good understanding and everything to how these gaps work and how you could take advantage of them. So if you have any questions, you could drop it in the comment section, or you could reach out directly to my DM and we could talk more. And I'll see you guys in the next one. So thank you very much for watching. I will see you in the next one.